Hey everyone, welcome in to another daily editorial here on the KE Report. We're getting an update from Trigon Metals, traded on the TSX Venture Exchange under the symbol TM and on the OTC markets under the symbol PNTZF. We are chatting again with the CEO, Jed Richardson. Now, Trigon Metals is focused at the Kombat Mine in Namibia. This is a copper asset. The company also holds the Silver Hill project in Morocco. We're recapping a news release that came out just yesterday, August 2nd on Tuesday. Now, the company announced that it is revising the mine plan to optimize production based on new information from the Kavango Pit Mine. Now, this is news that I'm sure comes as a little disappointment for investors, where the company is temporarily pausing operations to focus on cost control. Now, Jed, give us a little bit more information here on what drove this decision, because we've been talking a lot about how the company was ramping up production at this Kombat Mine. Give us some more insight on what some of this new information was from this Kavango pit that is causing this shift in operational focus, please.
Yeah, if you'll recall back when we were talking about our last operational update, we were ramping down into that Kavango mineralization and looking for that to supplement ore that was coming out of the central pit, where we were experiencing some challenges on grade control and recovery in the mill. We've now gotten into that mineralization, and it's actually been very positive. Our recoveries are up in the mill. The mineralization is a large tabular bodies like we see underground, and we can mine larger tonnages from this. However, what that means is it really gives us an opportunity where we can really drive costs down by focusing on this mineralization. Under our previous plan, we were targeting being really break even at today's copper price. We've seen the copper price really, collapse over the last 6 to 8 weeks, and we were at a juncture here where we could push the asset and see if we could kind of massage things and keep on operating, but where at best we would be operating at break even, or we could really address costs, take the opportunity presented by the Kavango mineralization and what we've learned about the Kombat trend, and build a mine plan around the higher grade, around the more consistent mineralization, and really take control of the cost part of the profitability equation here. We're going to take 6 months, and that 6 months does a couple of things. 6 months will give us all the time we need to drill that out. So consistently through that 6 months, you'll see drill results coming out of the Kombat trend, and then we'll update a resource based on what we've drilled out in that Kombat trend. When you look at our press release, you'll see we've marked out the pits, and that's pits 2, 3, 5, and 6. 5 and 6 are really newer discoveries that we've made over the last little while, with pit 5 being the Kavango pit that we've just started mining from. The pause gives us an opportunity to do this eyes wide open with a clear plan and a strategy that gets us operating costs in the $2.60 to $2.80 level. So even if copper does nothing, we'll come out a much stronger operation.
Well, it makes a lot of sense, Jed, to kind of adjust to the plan and really take the reins to bring the cost down, find the grade, drill it out a little bit better, and go along this Kombat Mine trend in the Kavango pit and get into that higher grade material in this kind of a copper price environment. But I guess it would be nice to also address that as far as the central pit, it would still be quite relevant. There's still a lot of resources there if you saw a higher price in copper. Like if we saw copper get back up to 450 or 5 again, would that be back on the table as well?
Absolutely. Like at higher prices, the central trend and the central pit make perfect operating sense. But we're also going to take this time while we do have the pause and see what we can do to better understand the mineralization there and see if we can drive costs down. But for sure, this is staying in resource. I remain very much a copper bull. I'm looking. I believe copper it will rebound here. We'll get to much stronger prices, and absolutely that central trend mineralization is going to be is going to be economic.
So then looking at this main figure within that recent news release, it outlines this combat trend and this central trend. So the central pit, that's in that central trend. This Kavango pit, that's in that combat trend. The focus now, is it fair to say, is just much more on this combat trend for when it all gets restarted, the production that is?
Absolutely. Absolutely. We have to drill out the Kavango pit, but we also need to tie up the rest of that trend and build a mine plan around it. We don't want to get in there, be mining blind, and then end up essentially like burying or covering up ore that should have been mined. That gets missed because we hadn't drilled out the area to the full extent.
Well, Jed, as you drill out over the next 6 months and kind of retool the mine plan, what will some of the news that investors should be watching for? Will there be releases about what the mine plan looks like? Are you going to do a PEA on it? What is the plan, I guess, just moving forward?
Sure. So we'll steadily be putting out drill results from the trend. And what investors should be looking at is you want to see grades that show, larger intercepts. When I say larger intercepts, I mean, 5 to 6 meters, but grades over that 1.2% copper. And we should be able to do that consistently in that area. And when you see those results, it's confirming that that things are going according to plan. Before we start up, there'll be a restatement of the resource, right? So just adding the new mineralization that we drill out during this period to the 43101 resource. But no, there will not be a new PEA or feasibility study on the open pit mine. We're happy with what we have. We're not changing anything to the mill. The mill's operating well. This is just adding new and more attractive areas to our mine plan.
So did you mention this is approximately, let's say, like a 6-month pause? You do still need to revise this mine plan and then again refocus at this Kavango pit. Is that a reasonable time frame to go through a revised mine plan and then also restart the mines?
Yes, it is. Like really what we're looking to do is expand the tonnage that we can get out of this area. Like I said, we're already into it. So this is well within our capability to get this done in 6 months.
Will there be any more capital that needs to be injected to develop this out or to drill this out further? How is the company doing on the cash position?
Well, there is some working capital that we're gonna need for this, but this is actually all funded from what we have on hand and our streaming deal.
Now, Jed, I was going to ask, does this impact this recent silver stream that we just talked about? It was only a couple weeks ago. Any impacts to that silver stream and the money that was just received?
Now, that's really earmarked for underground development. We've been in conversation with them, their understanding of our plan. So yeah, no impact.
Well then, Jed, what do you want to tell investors, I guess, as they read through this news? Anytime investors hear of a mine being shut down, although this isn't being shut down, this is just being temporarily paused to put together more or less a new mine strategy, investors do get a bit disappointed. But we also do have to understand that the copper price has taken a pretty significant dive from some of the much higher levels it was at. What do you want to leave investors with? Understanding this news and understanding still what the company could be able to do as you head into next year.
I'd like investors to understand that that we're willing to make tough decisions here and really look to bring things into our control. We understood that this was going to be a higher cost operation. We were absolutely taking advantage of higher copper prices in this restart. Now we've got an opportunity to to really course correct in a challenging market. We want to be confident, and we want our investors to be confident that we're building a cash generating operation. And this tough decision here does that. It gives us a competitive operating cost and gives us the tons that we can feed through the mill. We want to be able to hit our numbers, and this is going to give us what we need.
All right, Jed, thank you for this update. We will post a link to the Trigon Metals website and that news release outlining this operational pause. If anybody has any follow-up questions, please email us, either fleck@kereport.com or shad@kereport.com. We'll get those answered for you, and we'll follow along with the Trigon story, as the company does sound like there'll still be some news coming out, and we'll keep on staying up to date with you, Jed, in terms of possible restart, when that might happen. Jed, thank you very much for your time. We appreciate you breaking down this news. Please keep us up to date on future news.
Appreciate it. Thank you.